charts. Bitcoin, I want to show you guys this. This is that channel from yesterday. I adapted it slightly, but just notice that we're still stuck in this channel here. Look at this, and then look at low end, low end, low end, low end, and then we tagged it here. What I find fascinating is this, and I'm going to throw this out to you guys. Every time we hit this low end of this, we're getting these someone's coming in and buying. And I'm not going to pretend to know who it is, but it is interesting because yesterday we were hammering on this level and all of a sudden we got this huge pop, well, relatively huge pop in Bitcoin, and now Bitcoin's kind of gone back in the middle of this channel. But again, my point remains as of yesterday as well. If we break below this, that's trouble. As long as we stay in this, you stay bullish on Bitcoin in the near term. If this level breaks, which again is just below 35,000, that's where trouble can ensue. Flipping back to gold real quick, guys. Gold is pulling back a little bit. Remember what I talked about yesterday? I said to you guys that you could see a pullback on gold as much as down to this level, and that would be very normal. So again, any sort of thing like this, sideways consolidation, or even more of a dip down here, the key would be for me, I would like to see 1885 hold. On a technical basis, that would be what I would want to see hold. That would be a buyer's level. If you haven't gotten in gold, 1885 to 1900 would be a good level to look for that next leg to the upside that I do think, by the way, is coming.
Here's the scoop. Bitcoin is going through some pretty remarkable changes, and it's all about supply and demand. First things first, the available supply of Bitcoin is at an all-time low. But hold on, this isn't a bad thing. It's actually a sign that people are holding onto their Bitcoin for the long haul. Long-term holders, the true believers, are snapping up nearly all the new Bitcoin being created. In fact, 92% of it is going to these dedicated folks. The message here is clear. The big players are in for the long game. And guess what? This is making Bitcoin a lot more stable, keeping it above that $30,000 mark. But hold on to your hats, because this trust in Bitcoin isn't just coming from the little guys. Nope, everyone's piling in. And here's the kicker. People are also locking up their Bitcoin in a way that's hard to get back out. That's super exciting because it's making Bitcoin even rarer. Every month, a hopping 71,000 Bitcoin are being tucked away into these hard-to-reach places, and it's creating a sense of scarcity. So what's the bottom line? Well, all of this is painting a picture of a very positive and bullish future for Bitcoin. It's not just a flash in the pan. It's here to stay, and that's got everyone pretty stoked. So there you have it, the Bitcoin roller coaster keeps on rolling, and the future's looking brighter than ever. Let's continue our enlightening discussion with Gareth Soloway.
We're going to step over to this projector here, this computer screen. I'm going to look at the 10-year yield. Before we get into that, I want to say this. At 9:15 a.m. today, that's 15 minutes from the start of this broadcast, Jerome Powell is speaking. All right, I don't know what he's going to necessarily say. It's just a random speech, but ultimately I'm curious to watch, and we'll watch the S&P live to see if there's a reaction to what his comments say. Maybe there'll be a great trading opportunity right like that at that point. Okay, so basically we have the 10-year yield sitting right on top of technical support right here. What I'm going to do today, so we talked about this yesterday, so I'm not going to go into this today. There's not a lot of changes, but what I wanted to do was do something different today. Let's look at the bigger time frame. So what I want to do here, guys, we're going to flip over to the monthly chart. Now, when we flip over to the monthly chart, we can clearly see that this was your decline from essentially COVID down to the lows when COVID hit, and then eventually we saw the reversal back up. And you can see that pattern, kind of like a cup pattern, a little bit of a handle right here for that secondary move to the upside. But let's go out even more. Let's zoom out even more. If we zoom out here, let's look at where rates have been. And basically what this is this is going all the way back to basically 1980 when the rates were literally 16%. So those of us that might be a little bit younger, maybe if you're, sub 40 years old, you weren't alive when rates were up to 16%, but it does put it in perspective when rates are back to 4.5 to 5%, where they are historically. The problem is this. People get used to borrowing money at certain rates. They basically have more money in their pocket when rates are low, and so when rates go up, it puts hardship on people, even if historically it's not necessarily where rates have been. People essentially adapted to rates down here and were spending as such. They got their kind of means larger and larger, and therefore it is a hardship even moving rates back to 5%. Now, interestingly enough, what I want to do now, we're going to erase this trend line right here, and we're going to just draw some other trend lines on the chart. So what I want to do, guys, is as we bring this into focus, I want to take a trend line and I want to extend it down here. And I want to show you how charts even work with the 10-year yield, all right? So there's your trend line. And this trend line goes back to 1994. But what I want to show you on this is amazingly how you literally had a trend line here to here to here and right to here, and how when it got to that level, we saw rates get pushed down and pushed down. And look at what happened here. We saw rates dumping out during COVID and during that just post-COVID period. And then look at the move up and the breakout. And this has been a breakout in rates. Now, one of the things to remember is most people are expecting the Fed to cut rates over the next year or so. I think the first rate hike is projected now somewhere in May of 2024. Now, interestingly enough, is it possible for rates to come back? The answer is yes, but what we know on the chart is that your max downside is probably right around 2% on the Fed funds rate. Now, that's still a lot of cutting, so we could be in a very dramatic recession if rates go back to that level. But on a technical basis, that level now becomes support. And as we can see, this trend line has worked beautifully. So what's to say it won't work again, and meaning rates will bottom out at 4%? Now, let's extrapolate that thought process. Does that mean that the economy's doing great? Or my bigger concern is that if rates come back here, what do you think is going to happen to inflation? If money printing and free money or low interest money is out there, inflation's going to come back up. That's going to eventually cause the rates to have to go dramatically higher. And again, you have to wonder if we're repeating what happened in the 1970s. In the 1970s, we had inflation go like this, then it came down sharply, and you know what happened? The Federal Reserve back then started to lower interest rates too quickly, and inflation ended up going up and making a new high before rolling down like this. And so you have to wonder if this is telling us exactly that, right? Let's think about that. Doesn't this potentially pretend to essentially be that same sort of thing, where we have this scenario where we're going to see rates come in, but then have to go up because inflation is going to go up like that? And that's very interesting on the charts to take a look at.
Sam Bankman-Fried was convicted on all charges in the Department of Justice's fraud case against the ex-FTX chief, but his legal woes are far from over. He is also under pressure from the U.S. Securities and Exchange Commission, SEC, and the Commodity Futures Trading Commission, CFTC, which has slammed him with accusations of both securities and digital commodities fraud. Additionally, Bankman-Fried is grappling with a class action lawsuit alongside a list of celebrity FTX endorsers. Financial services giant Fidelity has addressed 9 common Bitcoin criticisms and misconceptions, emphasizing that some of them are either unfounded or unlikely to be a serious concern. They include volatility, suitability as a payment method, environmental impact, competition, lack of backing, potential code bugs, regulatory hurdles, waning public interest, and unknown unknowns. That wraps up today's crypto news highlights. Stay tuned for more updates, insights, and analysis from the world of cryptocurrencies. Please share your thoughts in the comments below. Don't forget to like this video and subscribe to our channel for more engaging content.